Alright, so let's go ahead and get on with some news. And again, this is the kind of stuff I talk about that is the term fundamentals. What does that mean, fundamentals? Well, the fundamentals are, for example, let me do this with a nature type of event. We have winter, and there's a mountain area, and of course it's filled with snow all over the place, snow and ice. And then in summertime, spring comes around, summer, all that stuff starts melting. Snow and ice starts melting. You have these little creeks that were just trickling with water become, a small river kind of thing. Decent flow. It's no longer trickling. You could go swimming in the freaking thing. It'll actually push you downstream. It's got some power. It's 4 feet deep as opposed to this deep during winter time, just trickling. So someone who would stand there and see this raging water now, why is that water raging? What does that mean? What causes that? Well, it's the fundamentals of nature. Right now, currently, that's driving those river rapids or whatever that used to be a creek. Well, what are the fundamentals? Well, the fundamentals are we have this thing called wintertime, snowpacks on top of this mountain way up there. You can see it out in the range, yep. Well, on the side over there, you see that little dark line, yeah? That's actually the ice melt and snow melt that comes down into these little rivers and valleys and comes down to the streams. And as that water melts, or snow melts from the sun during late spring and summer, that's what causes this reaction, cause and effect, right? That's what that's what the word fundamentals mean, okay? So what is causing, or what would cause, a massive increase in the price of gold and silver? Oh, I don't know, everything economically speaking right now, over the last few years, that are fixing to get 10 times worse here in the very near future. One of them, case in point, is known as something called a derivatives contract, which is like a bet on a bet on a bet. It's ridiculous, actually, but nonetheless, that's the biggest, single most powerful fundamental that will be driving gold and silver to the moon, because that is also the same single most important fundamental in this whole picture that is going to be causing, and is causing, the collapse of the banking and financial systems across the world. And I read something earlier today. Matter of fact, it just should take me a second to find this again. Derivatives. Derivative counterparty risk. And I noticed, that's why I typed into Google, derivative counterparty risk. Oh, a PDF from the IMF.org. I thought maybe I should check it out. The IMF, that is kind of the New World Order central peak of everything. And this was published in November of 2008, right after the crisis. And without reading the whole thing, I'm going to read the conclusion at the end of what the derivatives are, and how the counterparty or counterparties are the things that could take the whole thing down. It's the counterparty risk that means everything. Well, what does that mean, counterparty risk? Well, let me give you another nonsense example so you can understand, layman as hell type of terms. If I'm a terrorist and I have a bomb strapped to my chest and I walk out in the middle of the street and there's not really anyone around me and I set it off, well, I just blew myself to smithereens and no one else got hurt. That's it. So one person, me, blew myself up. In other words, just pretend I'm a bank. I blew myself up. I imploded, right? I was a bad bank. My bank's gone. But what about the other banks? They're fine. They're right there. You can go to them today. They're no problem. They're right there. Oh, okay. Well, if this bank, single bank, has massive derivatives exposure, and there's those counterparties that are attached to me, in this case, human beings standing around me, chained to me, by the way, forcefully chained to me, and even if they know, hey, this guy's got a bomb on his chest, man, I hate to be around when that thing goes off, and they all kind of talk about that as they make massive amounts of, millions upon millions in bonuses, and just, yet they're still attached to this thing that's a ticking time bomb. But they're loving it. It hasn't gone off yet. We've been here for years and years and years and years. That thing ain't gone off yet. We're good. I just bought 3 new houses. I got a helicopter. How about you, Paul? Yeah, me too. I got a new helicopter and a private jet. Oh, good. And they're all attached to this bomb. And then one day the bomb goes off. Even if they try to run, it doesn't matter. They're attached to it. Those are the counterparties. They all just took shrapnel and massive amounts of shrapnel damage, thus destroying them, killing them. Even though you can kind of recognize there were people there. Like you can kind of recognize it used to be a bank kind of thing. It's destroyed. So what we're going to see here in a second is how they that bank Dexia is now been the government has taken it over. They've agreed to take it over, which again, that's a socialist move, but they did that. So do you think, and I know we talk about, oh, crash JP Morgan, crash Bank of America, and this and that, but if they were too big to fail before, and I want to just run this by you, I'm not saying this one way or the other, do you think it's possible that old socialist Obama might go ahead and easily say, yep, let's go ahead and privatize these banks with the government, basically, and the government will take over? So, it could happen, and then, hey, well, I thought JP Morgan was going to crash. Not anymore. They've got the full faith and whatever back credit of the entire United States of America. They will not go under, even though they're going under. They're taking everybody with it because they were forced to marry the government, and the government's taking over. That could happen, but I don't know if it would. I think at the stage in the game, Congress and everyone else, I don't know if we would be able to do that. I think there's enough pressure that they'd say, no, these rotting carcasses have to go away. But I don't know. So let me read you this little summary at the end, the conclusion. Conclusion and policy implications. The OTC, over-the-counter derivatives market, is tailored to clients' needs and thus goes beyond what is available to the standardized contracts that exchanges offer, assuming anywhere from 1 to 25 basis points bid/ask spread on the notional value traded, which is about $600 trillion. This is based off of 2007 information, by the way. Dealers derive a significant income from over-the-counter derivatives markets. Thus, banks and prime brokers have a vested interest in protecting their franchise and therefore limit transparency and standardization. So they're limiting transparency and standardization. However, if indeed the results of our scenarios are illustrative, counterparty risk is large, and especially large where cascade effects result in more than one bank or prime broker failing. And again, remember what I told you, that example of the chains tied to that one bank. In addition, the repricing risk following a counterparty failure cannot be easily quantified. Pressure to re-hedge at such times will be enormous and perhaps unaffordable, which could lead to unanticipated pressures on the financial system. You don't say. In light of this, there are some suggestions in addition to those being proposed that could further support the ongoing efforts to reduce counterparty risk in the over-the-counter derivatives market. He lists a few things. Let me see. There's a few in here. There's one towards the end that's, I think, the most important. Yeah, this is one interesting part. However, most regulatory efforts are focused only on credit derivatives, or about 10% of all over-the-counter derivatives. Recent tear-ups, e.g. Tri-Optima, may be forthcoming soon from Clearing Corp via Depository Trust and Clearing Corp. The Chicago Mercantile Exchange, or our favorite, the CME Group, is a viable proposition too, and has hedge fund industry support. The CME has recently announced a joint venture with the hedge fund Citadel Investment Group to launch a combined, this is 2008, to launch a combined trading and clearing operation that would aim to standardize the credit default swap contract and its associated bilateral margin requirements. And by the way, the credit default swap market is in the God knows how many trillions of dollars. It's another stinking corpse. Looking beyond the credit default swap market, the interest rate swap market, or IRS they call it, should be addressed, and NASDAQ OMX will likely launch the first exchange to trade and clear interest rate swaps, a market which happens to be more than 6 times larger than the credit default swap market. Wow. And that's not something you normally hear on the financial news or anything. It's credit default swaps and derivatives, and that's it. We have here these interest rate swaps that are 6 times more larger than credit default swaps. Let me see. There was one more thing. Or maybe not. Maybe I skipped over it, but I'm not going to sit here and put you on hold while I try to find this thing. There was something about how if there's a nuclear reaction basically that could happen, not for good, not for the better. Here it is. Collateral should be liquid securities and not merely of a high credit quality. Moreover, collateral should be allowed to be rehypothecated. The ISDA collateral surveys available on their website are mostly cash and government securities, which are U.S. and some European. If collateral could not be rehypothecated, though, the entire financial system would be put at risk. And this is the basis of so much activity in the system. The clearinghouse would allow netting down on all collateral between individual counterparties at the level of the exchange, which will act as a central counterparty for all trades. So if these things the collateral cannot be rehypothecated, the entire financial system would be put at risk. And this was from 2008 regarding up until 2007 and I guess part of 2008. So here we are. The $600 trillion derivatives are even more massive than that now. It's not going away. It's 10 times worse. Maybe not 10 times, but you get the point. So on to some news here. The Telegraph, UK. Conservative Party Conference 2011. Boris Johnson defies David Cameron, which is the Prime Minister, to call for a referendum on Europe. Mayor of London is who this guy is. The London mayor said it was not a bad idea to give the British people a direct say on Europe, EU, etc., Eurozone. He told a fringe meeting at the Conservative Conference that voters deserve a chance to express their views on the issue. He said, quote, "The British people haven't had a say on Europe since 1975. There hasn't been a vote. It seems to me to be that if a reasonable question could be framed and put to the people of this country, I think it is not a bad idea. One option for the referendum would be an in-out referendum," he said. He predicted that while voters might not vote to leave the EU, they might demand a looser relationship with Brussels. Now, I would go on and say, if they had a chance to vote, watch what they vote for. They don't want any part of that EU due to what's happening right now, and they would say, get us off this and let's go back to our own currency again in a heartbeat, just like the people of Greece are screaming. So, let me move on to the next thing. Euro crisis spreads and puts the world economy at risk. Also, this is from the Guardian, UK website. The Telegraph and the Guardian are usually the two biggest ones out of the UK. When G20 finance ministers meet in Paris next weekend, the stakes will be enormous for both Europe and the world. The finance ministers from the G20 major economies meet next weekend. They could be excused for having a sickening feeling of deja vu. This time it's Paris, not London, but just as in May 2009 when Gordon Brown brought the power brokers of the world economy together in Docklands, they are trying to prevent a financial crisis spiraling out of control and dragging the global economy into recession. This time, though, there is far less political agreement or goodwill. Instead of the U.S., where the collapse of Lehman Brothers sent consumers and investors into panic mode, this time the focus is firmly on the Eurozone, and time is running out. Greece is on the brink of going bust, if it doesn't receive a fresh injection of cash. And that injection of cash isn't like, here's some money, have fun. It's a loan, either through the IMF or the EU and or both. So far it's been both. And if you want your next payment, you need to cut workers, you need to cut down this spending and this and that. Okay, we did it. And all the people threw a fit. Still isn't good enough. We need you to cut some more to get your next payment. This is financial terrorism. Max Kaiser's right when he talks about financial terrorists. They are really, with their financial weapons of mass destruction. Perfectly said. So instead of the U.S., where Lehman was collapsing, and that sent consumers and investors into panic mode, this time the focus is firmly on the Eurozone, and time is running out. Greece is on the brink of going bust if it doesn't receive a fresh cash injection. And bond vigilantes are focusing their fire on the much bigger Italian and Spanish economies. They've already moved on to Spain and Italy. They already recognize Greece as a dying carcass. It's already dead. It's a carcass, which had their debt downgraded by Moody's on Friday. So Italian and Spanish, both economies, both countries, had their debt downgraded by Moody's on Friday. I'm pretty sure I did a few videos when Greece was the one in trouble, and then Portugal came out and said, oh, our books are fine, our economy's sound. Don't worry about it. And I told you, don't listen to it, they're next. They were next. Then I read you the next article, about a month later, whatever it was. Hey, remember what I told you, listen to them now. Now they're in trouble, they need a bailout, blah, 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 etc. Done. I said, oh, and by the way, now that they came out and had to admit that he was wrong, their little leader, prime minister, whatever the hell he is, look who's stepping up at the same time. We know Greece was there. We now know that Portugal was there, and Ireland. But Spain, we are standing strong. Our economy is sound. We're great. We're in good shape. And I made another video to say, hey, here's the prior two examples I gave you. Here's my third one. Don't listen to what this bozo is saying in Spain. This prime minister, watch what happens. And, I mean, it's already been in trouble. I mean, this is nothing, actually, to hear that their debt got downgraded. This is obvious. If I douse a house with gasoline and start sparking, sooner or later it's going to catch the thing on fire. There's no doubt about it. Unless I stop sparking, sparking the lighter, not necessarily making the flame, but even a spark. Now if I walk away, well then okay, it's not gonna catch on fire. But if I keep sparking and sparking even harder, obviously it's gonna catch on fire sooner or later, much sooner than later, because I'm going at it even harder. In other words, the economy's crashing even harder. The paper monies are being printed out of control. Job losses, the whole thing, that's that spark getting harder and harder and faster. So meanwhile, many economists think the Eurozone as a whole may already have sunk into recession. What do you mean, may have already sunk into recession? It's been there like hours in America and hasn't left. Oh, the recession has officially ended in America, April 2009. Really? Really? I didn't know that. Oh, okay. That was the official story. Kind of like the official 9/11 report from the 9/11 Commission, which was complete nonsense bullcrap and left Building 7 completely out of the report because they could not explain why that 47-story building crashed straight down just like the Twin Towers did at 5:20 p.m. that day. It was left out. The media had to leave that one alone, and I didn't even know about it myself till several years ago. And it happened the same day. And every video that played for months after that about the towers coming down and the planes crashing in and all the talking heads on TV, they never once showed Building 7. Only on the very first day that it happened, and that was it. That's a whole other topic. So, I'll stop there. No need to continue on that. Next one, The Telegraph. Global crisis heralds loss for Goldman Sachs. What? Goldman Sachs, that is, quote, we're doing God's work. You can't be doing God's work if you lost one time in a row finally. You've been a winner every quarter, profitable every quarter. Am I about to read that right now they're not profitable? This last quarter? What? Goldman Sachs of God? Yeah, right. Goldman Sachs is expected to make its first quarterly loss since the depths of the financial crisis, underlying how the current market turmoil is hurting Wall Street's biggest banks. Oh, what a shame. The biggest banks, man, I feel so bad for those guys. I think I may send them some silver. No, I'll send them I'll keep my silver and send them the pocket change, the garbage metal. The losses, estimated to run into several hundreds of millions of dollars, are expected to spark a $1.45 billion cost-cutting program at the bank. A number of highly paid bankers are expected to lose their jobs and be replaced by graduates. The bank wants to maintain headcount but cut some of the costly employees. So I'm just going to run a scenario by you, and the first thing is the webbot inside my mind right now punching my brain to say, hey, don't forget about me. So I'll go ahead and give them credit right now. There's going to be whistleblowers coming out and blowing the whistle, clearly, on all kinds of stuff. From the government to NASA to banking system to everything. You don't suppose that some of the big shots, not the real big shots, but the real wealthy workers at bank, say, Goldman Sachs, who get cut, didn't accidentally take some data with them or some emails with them and realize I'm never going to get a job like this again the rest of my life. I now have a lifestyle way up here that I don't want to go away for sure. I would like to at least maintain what I have, and I just got cut and will never see those types of incomes in my life or my kid's life or my kid's kid's life, which of course you wouldn't be around that long, but you get the point. So what can I do to make a bunch of money real quick? Oh, I have an idea. Yeah, I took all that data with me, emails, spreadsheets, whatever, paperwork, and I'm going to go ahead and expose a little something that Goldman Sachs was doing. You don't think that might happen, do you? Nah, people wouldn't do that, because the people who are at the top, including these guys who are going to get their jobs cut, as long as they're making $600,000, $700,000 a year, whatever it may be, I don't know the exact numbers, they're sitting back loving life. I know it's corrupt. I know the place I work for is corrupt. I know they shorted the housing market while they were taking investors' money and telling the investors the market can only go up, that's why we want your money, and then shorting the market behind the scenes as the whole housing market crashed. Goldman made a ton of money, but not necessarily for all of their investors. So, but I was making $600,000 a year. What the heck? Life's good. And then all of a sudden, you get a pink slip at your desk, you're fired. We have to do some cost cutting, and rather than pay you $600,000, we could hire a new graduate out of Princeton, Harvard, or Yale for $150,000. They're not going to tell you that, of course, but you'll know that that's what that means. Well, damn it. Okay, I'll take my pink slip. It was fun working for you, Goldman. All right, have a nice day, Johnny. And old Johnny takes the emails and everything with him because he's pissed off that he just lost his job. Now he becomes an instant Wall Street protester. Except when he's at the front of the podium and talking or wherever he's got a bullhorn, he's going to have some paperwork in front of him. Potentially. I'm making this up, by the way, but you can see how this could roll. And he's going to read all the things that Goldman does not want him reading. And he's going to be the focus of something. All the cameras are going to be on him. Ex-Goldman employees blow the whistle, headlines, right? You can just see it now. So the reporting season, I'll finish reading it. A number of highly paid bankers are fixing to get cut. Goldman's results will be one of several third quarter updates from Wall Street's major banks. They are expected to reveal difficult trading conditions for the sector buffeted by volatile markets, anemic U.S. economic growth, and lack of mergers and acquisitions activity. Companies begin reporting their respective figures for what is expected to be a torrid third quarter from the end of this week. The reporting season kicks off with J.P. Morgan on Thursday, which would be 10, 11, 12, 13th of October. Okay. On Thursday. J.P. Morgan on Thursday, and then with Goldman set to post its numbers a week later on October 18. So, and again, that's right around the time frame of the WebBot and the G20 meeting, bad news coming to a world near you financially very soon. But I gotta say, I'd love to see nothing more than J.P. Morgan just post a horrendous third quarter, because, in my hope for J.P. Morgan, because their massive short position They've been having to cover their short positions for so long now, being hit hard with silver hitting 50 and 40 and all that, and they keep, trying to push it down below their stock price, and they're struggling. I'd love nothing more to see that it was the silver bugs who caused J.P. Morgan's third quarter loss. Now, I don't know if we're going to be able to see that data somehow, but maybe we can hope and, a wish and a prayer kind of thing. Analysts at Credit Suisse expect Goldman to have lost $392 million in the 3 months to the end of September, while analysts at Barclays predict losses in the region of $180 million. Which, again, I would hope it is way more exceeding both of those. And, hey, analysts unexpectedly misquoted what, their thoughts were on how bad it was. And then the market sees that and just, again, you could short the market, as I made a few videos lately. I'm not going to have any part in it. I just can't do it. I can't. I'm just sticking with silver, man. It's so tempting. I want to do it so bad. It eats my gut up inside. But I just can't. I'll stop on this one. Don't need to continue. Last and final thing. Agreement is reached to nationalize Belgian. I said privatize, excuse me, earlier. I meant nationalize. It's actually, you could say it's privatized, but it's the government that owns it. But the true word here is nationalize. Banks fail, and rather than let the carcass die, and of course bring down the whole stinking system with it, the entire government now steps in and says, we'll go ahead and nationalize the bank so that we can make sure it doesn't go down. And then, of course, they could probably also hide a lot of relevant data, at least for a short while. So they're going to nationalize that bank, Dexia, that's been in the hot seat lately, lost 40% the other day in trading. They had to halt trading on that bank. They had to stop it. The circuit breakers kicked in. You couldn't short it anymore or even get out of your position. Paris. Europe's debt crisis hit another milestone on Sunday when the French bank and Belgian governments agreed to nationalize Dexia, Belgium's biggest bank, infusing it with billions in taxpayer money after it became the first casualty of the Greek sovereign debt crisis. The move came as Chancellor Angela Merkel of Germany and President Nicolas Sarkozy of France acknowledged that Europe's banks still need billions of euros more to cushion against a possible Greek default. In meetings Sunday in Berlin, they announced that they would have a, quote, comprehensive solution by the time leaders of the G20 group of nations meet in early November in Cannes, France. I'm not sure what that is. Cannes. Quote, we are determined to do what is necessary to guarantee the recapitalization of our banks, Ms. Merkel said. That's like saying we are willing to do whatever it takes to stay on board this ship. And then someone stands up, a bozo stands up, who's got slight mental retardation even, and says, but doesn't the ship have a gigantic hole that can't be patched? Yes, it does. So it's going to ultimately sink to the bottom of the ocean. Yeah. With us on board. No, we're not saying that. We didn't say with us on board. Or with anybody on board. What we said is we will do whatever it takes to stay on board. In other words, yeah, you're going to sink to the bottom of the ocean. But they word it differently so that you think, oh, good. We're going to do whatever it takes to stay on this ship. So they're going to fix that hole. No. They're not going to fix the hole. They're going to actually make it bigger, by the way, by what they're doing. Because the water rushing in is so powerful, it's actually eating the hole up even bigger. Get on the lifeboats and get the hell out of here. That's what this means. Dexia is the biggest Eurozone bank failure in quite some time, said Peter Zahan, Vice President of Analysts at Stratfor, a geopolitical risk analysis company based in Austin, Texas. Quote, it will force investors and shareholders to take a second look at what they thought was stable. And keep in mind, where's this other part here? Maybe it was after that. Basically, this bank, Dexia, where's this? Let me search for this word stress test because it was in here. Anyway, this bank, Dexia, just several months ago, Europe did their little, we're doing our stress tests, and it passed with flying colors. See, banks are well capitalized, Our little stress test analysis was, we ran it, the bank succeeded through it. Solid bank. Nothing to worry about, folks. Nothing to worry about. All right, great. You know, we also had stress tests here first. We did that first in America. And as we can see, it doesn't matter. It's just nothing more than a piece of paper that says you passed. It's fake. They really didn't pass anything, but here you go. Tell the world that we passed. And let them believe our words. That's all it takes. So Dexia also passed with flying colors just many months ago. Stress tests in the banking system in Europe. And now it is the largest failure thus far, I guess, in any kind of recent history and whatsoever. So what does that tell you? What I just said. It's a lie. Everything's a lie. I don't care about stress tests or this test or that test. It doesn't matter. You do what you want to do with your money. I personally have taken almost all of my money out of the bank, and it remains that way. Like I said, I keep about 1 month's worth of payments of stuff. That's it. That way I can write a check or automatic debit, stuff comes out, etc. I don't want to have to run to the corner store or get a purchase or a money order and mail it out. I don't have time for that. So I can accept the risk of a possibility of, hey, you can't take out your money right now, but you can take out, $300 or $500 per day. Well, that's fine. A few days, 2 or 3 days, all my money's out anyways, and sitting here with the rest of my assets. So that's what I'm doing. This is again, everything I just read you, every single thing I just read you does what to the price of gold and silver? Do you think the stuff I just read you should make the price of gold and silver go down? And if so, I'd love to hear why. I mean, knock me out. Please tell me. Do a video response. I'll allow it. I absolutely allow it. What news makes that I just said makes gold and silver prices should make them go down? There ain't a single thing. So at the same time, you could argue, well, then why aren't they going up? Why haven't they're down actually right now? Because they're paper traded things on Wall Street, and the prices are set on the real asset through a piece of paper that is leveraged at least 100 to 1 with the real thing. Again, my example I always use: a standard silver futures contract consists of 5,000 ounces. If there's 100 pieces of paper contracts, they all are for that one 5,000 ounces. There should be 500,000 ounces for those 100 contracts. No. There's only 5,000 ounces for all 100 contracts. So if one person decided demand delivery, I want all the 5,000 ounces, here's the rest of the money to buy out my contract, that leaves the other 99 people left with nothing, but due to recent history and the way it's been, they don't care anyways, because no one ever demands delivery. 1 little percent, that's not a big deal, it's fine. Until people start really demanding delivery in the paper markets. But again, even if the market crashes hard, more bad news like this keeps coming out, another bank fails, another bank is nationalized, etc. It doesn't matter. The long-term goal, trend, etc. for gold and silver is up, up, and away. And when they try to force it down with the paper schemes that they do, it pushes it down, but then it goes to a new high. And then they push it down again, then it goes to a new high. Until ultimately, the whole world finally understands these people lost control, their financial system is garbage, it's corrupt, it's bankrupt, oh my God, what do I do? And then they finally realize I better run to gold and silver too. By that time, we're probably looking at well over $100 an ounce for silver. And we'll definitely be at the $3,000 mark for gold. So, just want to share that with you. That's all I got for you tonight, and we'll see what happens, what the week brings, what kind of news we'll have. So,